Report Friday. The numbers came out for April just a little while ago. 263,000 jobs created, 3.6% unemployment rate. Gary Friedman from Rockland Trust joins us to talk about it. Obviously, you know, more than 50,000 above expectations, 49-year low in terms of unemployment. What's your overall takeaway of the numbers today?
Strong report, obviously, maybe not unexpected given some of the reports that we saw earlier this week. The ADP payroll report came out middle of the week and showed some very strong job creation, and especially with the mid-sized companies. We saw the but the good news is, I think, with this report is that we saw 163,000 jobs, 270,000 jobs created, and we saw inflation, or the wage increase, really only at 3.6%.
Right. So I want to ask you a question, because you assume with 3.6% unemployment, I ask this of you guys all the time, and you have strong numbers, why aren't wages going up? Like, what is the reason? Because usually with a tight labor market, employers have to pay. It's logical. They have to pay more to get people to come to work. Why isn't that happening?
Yeah, I think we saw, up until recently, was probably the latter half of 2018 where we finally started to see some wage growth come into the pipeline, and it's still, significantly below the 50-year average, which is 4.1%. But when you sort of take out, the 70s and 80s where we experienced some high wage inflation, the average wage growth was probably been closer to maybe 3% rather than the 4%.
So you're saying it's not that bad?
Correct, yeah.
Okay,
yeah.
Interesting. Now, I want to talk about the president. I'm not going to ask any political stances of you, but, the president was talking about lowering rates by 1%. With these numbers, that absolutely won't happen, correct?
Definitely. The Fed chairman came out recently, just after the recent minutes were released, and he said he doesn't see a case for either increasing or decreasing rates. And I think the Fed is probably more cautious at this point about inflation being too low or possibly entering a deflationary environment than they are worried about increasing inflation.
A lot of people say a president is either lucky or unlucky with the economy, that they actually don't have a lot to do with it. But most voters don't necessarily see it that way. Does Trump own this economy?
It's a great question, and I'll probably have to think about how I want to answer that. But I think the best way is really to say that I think when the economy is really good, the president gets too much credit for what's going on, and when the economy is bad, they typically get too much of the blame. But having said that, the numbers are the numbers, and the economy continues to move forward at a solid pace.
Okay, so let's talk about the economy versus the stock market. We know a lot of people aren't invested after the Great Recession still, but I love this concept of, what do you tell people, your clients, who you want them to continue to invest, or dollar cost average or whatever, when the markets are this high? Is the appetite for risk greater or less? Like, what's going on with your clients?
Appetite for risk is probably a little bit lower, but I think what you really have to focus on, we talk about this bull market being 10 years old now, and bull markets just don't die of old age. They need to die for a reason, and the primary reason that bull markets typically end is because the economy enters a recession. And when we look now at the data that's out there, we're 117 months into this recovery, second longest recovery in recent times. The 1990 recovery was the only longer recovery right now. So as long as the economy continues to move forward at a solid pace, the stock market can continue to do well.
And there's no signs of a recession on the calendar, right? I mean, we're at least 18 months away from anything negative, right?
I would agree. Yeah, there's always a probability of a recession occurring, but I think the probability, or a high probability, of that happening in the next 12 to 18 months is probably relatively low.
Gary Friedman from Rockland Trust, we really appreciate you breaking it down for us, and we will be right back.
Great, thank you.